Hi, welcome to the Market Alert for Thursday, the 16th of July 2015. And yesterday, Yellen decided to speak an hour earlier than the time that was given out by Forex Factory at 2 p.m. and she's going to do the same again today, even though it says 3 p.m. So be warned, don't trade the first hour. We'll confirm this with you in an email like I did yesterday, just to let you know. So Yellen came out talking about the possibility of increasing interest rates yet again to try and normalise the monetary system after 8 or 9 years of keeping interest rates at zero. And I still can't see how it's going to happen and if it will happen at all. But that's what she's saying. And the market appeared to like that. We had a signal at 14.55 just as she finished speaking there. You can see the market going up and trading over the 20-point scalp and then being stopped out by the trailing scalp. I'll just show you this. You've got the entry price there and then the market with 50% trailing. You can see how the market hit the scalp, and then as the market trails higher, you can see the market being stopped out. Not on this bar, is the bar before, which is there. So it's only around 20 points on the trade by the time you've got the spread on this trade, and then the market goes into its quiet phase during the afternoon, and then in the evening you can see we have a potential sell signal there as with a PTP and a triple X, and the market coming down towards the 18,012 level, not quite making it to the 18,000 psychological level there, but again just trailing the stop once the prices are through the 20-point scalp there. Again, you can see that you've got around this area for the actual market taking out. You've also got the buying pressure coming in there, followed by a bit of selling, and then a straight reversal with the professional buying as well, which is a clue that prices are going to find some sort of support there. And again, around possibly around well, we've got 1860. Let's just do a quick calculation here down to around there. So it's around 30 points again, but taking off a couple for the spread and slippage. So the market giving a couple of trades, but again, just to warn you, it could be 2 p.m. when Yellen starts speaking, and it can be all done and dusted by 3 p.m. And there is more news as well, which we'll have a look at in just a moment. So the Greek deal has been passed. It's still not been ratified by the Europeans, though. They have to do that, I don't know whether it's today, but over the next few days. And it's a shame that it's been done. This has just made life utterly miserable for the Greek people, with more austerity, reduction in pensions, increase in pension age, and VAT increases. All the great components to really boost an economy and to put it back on its feet. Absolutely not. They should have left, which, you know, I've said before, and they would have gone through a bit more pain initially, but at least they wouldn't have to find the money for 300 billion, which is now their debt. But that's compared to the US, which I thought was highly humorous. Looking around at what Yellen was saying yesterday, this photograph of her in front of the US's national debt of 18 trillion. As I say, highly humorous, and she's not too concerned about China or Greece. She says there's been exits before, so she's just trying to push this to one side. But you can see they've got their own problems anyway, as we have in the UK with 1.5 trillion and 4 trillion with unfunded liabilities. So the 300 billion that Greece have is minuscule in terms of the size of the debt, but of course it's the debt to GDP ratio which is the important thing. So that's as far as the news is concerned. Yellen wants to increase interest rates, and the Greeks unfortunately have voted 229, I think it is, to 61 against for the Eurozone bailout. It is a pity, but there you go. Back to the markets in the daily chart, you can see this has boosted the market, not as much as I thought it would on the overnight prices, but certainly heading to the 18,180 where we saw all of this Greek problem really take over the mainstream news. And it's just a case of keep marching on and keep the market moving higher. Although in May Yellen did speak of a stock market bubble, and of course if she does, and it's a big does, increase interest rates in the autumn and the markets crash, then she's got a get out of jail card by saying, I did warn you in May that the stock market was in a bubble. So be warned. And of course for us, which we'll have a look at in a moment, is the implied volatility to give us that clue that such an event is going to happen. So in the news today, Yellen is going to be speaking, and I think it's 2 p.m, but again I will confirm. Philly Fed is the manufacturing index is pointing, which is amazing really. She's talking about increasing interest rates. The previous 15.2, the forecast is 11.9. And if this comes out at that level, then I hate to say this, I expect the market to go up. Bad news, but they're trying to keep this Ponzi scheme in the highs, and they will force the market higher even on bad news, which we've seen over the last X number of years. So Yellen testifying, and Bank Governor of England, Carney, is going to speak as well at 7 p.m. So it'll be interesting to hear what he's got to say on Greece and what Yellen proposes as well, because usually when the US increases, we generally follow suit, as the old expression and cliche, when America sneezes, everybody else catches a cold, also applies in the sense that when interest rates increase in America, it sets a precedent for the rest of the Western world to consider increasing their rates too. Very much doubt it, but you know, it's a mad world at the moment. On the implied volatility front, 1152 for yesterday, and again you can see how this precipitous drop in the implied volatility as the Greek exit now is going to be dropped from the mainstream. The misery is going to continue for the people, but it'll be taken out of the mainstream news, financial news as well, and everything reverts back to normal. Keep the illusion alive and move the markets back up on fresh air. So as we head towards the late summer, we can expect to see the implied volatility moving lower, and each time it's got down to these sort of 10% levels you've seen before, that we get a big correction in the underlying market. So we are living in interesting times, and certainly as we go into late summer and the autumn as well. Right, that's it from me for today. I'll see you in tomorrow's edition. I'll also drop you a note if Yellen does speak earlier like she did yesterday, just to give you a heads up there. Other than that, I will see you in tomorrow's edition, and as ever, thanks for watching.